Hi guys, welcome back to the channel. Are you team gold or team silver? Both are precious metals, but they have different roles, risks, and rewards. Let's break it down together. When it comes to historical role and purpose, gold, the heavyweight of precious metals, has always been the ultimate safe haven, a store of value trusted for centuries. It's the metal that central banks hold in their vaults and investors turn to when markets get rough. Silver, on the other hand, is also a store of value, but it has a dual role. It isn't just for jewelry. Over half of its demand actually comes from industries like electronics, solar panels, and even medicine. So, gold is mostly about investment and stability. Silver mixes investment with industrial demand. Gold as a safe haven or any asset refers to an investment that is expected to maintain or increase its value during times of economic uncertainty or market downturns. Gold tends to hold its value or even appreciate when other assets, like stocks, decline. Coming back to gold and silver, when it comes to price volatility and market size, gold's market is much larger and more liquid. This means its price tends to be more stable and less affected by sudden changes. Silver's market is smaller and prices can swing twice as fast as gold, up or down. That makes silver more volatile, but also opens up the chance for higher percentage gains. Next, let's consider affordability and cost of entry. Gold is expensive. Just 10 grams can cost almost 1 lakh rupees. That makes it harder for beginners to buy in large quantities. Silver, by contrast, is much cheaper per 10 grams. It's easier for small investors to start building a meaningful position in silver. Next, let's compare safe haven versus industrial demand. Gold's price is driven mostly by investment demand. It shines brightest during crises, currency devaluation, or high inflation. Simply put, gold is there to shield your portfolio from unexpected shocks and risks. Silver can also act as a hedge, but because it's used so much in industry, it sometimes behaves like an industrial commodity. This means it can underperform gold in deep recessions, but might outperform gold when industrial demand is booming. Next, let's compare storage and practicality. Because gold holds so much value per 10 grams, it takes up less space and is cheaper and easier to store. Silver is bulkier. To store the same rupee value in silver, you'll need a lot more metal and space. That can increase storage or insurance costs. When comparing returns and risk, historically, gold has offered steady and reliable growth. Silver can deliver higher percentage gains, but those gains come with bigger price swings. So, which is better? Gold's main purpose in your portfolio is to protect you from the kinds of uncertainties we talked about. If you're risk-averse, you might prefer it. If you're comfortable with more volatility and want potential upside linked to industries like clean energy, silver could appeal to you. Here's an approach. Consider your goals and risk tolerance. Diversifying between both metals can balance opportunity with stability. Ultimately, it's not just about gold versus silver. It's about building a strategy that works for you. Before we end the video, let's address one question. Why does gold price rise more in India than in the US? Do you find this helpful? Share the knowledge with family, friends, and colleagues. And don't forget to like and subscribe for more such useful information. First up, gold is priced globally, but sold locally. Gold trades on international markets, mainly in US dollars. So, the base price of gold in India starts from the global price. But by the time it reaches your local jeweler, several local factors come into play. Next up, rupee depreciation. This is a big one. The USD-INR exchange rate plays a huge role in pushing gold prices higher. Let's say gold is priced at $2,000 per ounce globally. If the dollar is worth 80 rupees, then the gold costs around 160,000 rupees. If the rupee weakens to 85 rupees per dollar, the same gold now costs 170,000 rupees. So, when the rupee falls, gold prices here can rise faster than they do in dollars. Third, consider import duties and taxes. India has high import duties on gold, currently around 9%. If these duties go up, gold prices in India rise more than the global increase. For example, even a small global price rise feels bigger because of added duties. Then there's local demand and seasonal trends. Demand for gold surges during wedding seasons, festivals like Diwali and Akshaya Tritiya. This extra demand can push local premiums higher, making the price rise more sharply than in other countries. Next, there's supply chain and dealer margins. Transport, insurance, and dealer commissions all add to the retail price. When demand spikes or supply tightens, these margins also increase, lifting the price even further. So the next time you see the gold price jump, it's also about the rupee, taxes, and local demand. I hope you found this information useful. If you'd like to discover the smartest ways to invest in gold and silver, let me know in the comments below, and I'll make a video just for you. Until then, keep learning, stay curious, and invest wisely.